Okay, we're live again. Hello, everyone. I am Nada Ahmed from Energy Tech Nexus, and I have Jason here with me. And this is the second time we're doing it. We decided that every Monday morning we want to come out here and share what's the latest happening in Houston in terms of energy tech in general, but
Mhm.
also, kind of zoom out and see what's happening within the industry and share some of our thoughts and what we're seeing and what we're hearing. Energy Tech Nexus, for those of you who might not know, we're an energy transition hub for companies working in energy transition, working in energy in general, working in cleaner energy technologies. We have over 100 startup members. And we're really excited for this new year as we have lots of great plans of what more things we're going to do. We have an investor program. We have a scale up program for startups who want to come to Houston and give them exposure. So go to our website if you want to know more about what we do. But this is really about Jason and I just riffing on what we're hearing on the streets and what's happening in our ecosystem. So, Jason, let's start by maybe just talking a little bit about some of the events you went to last week in
Mhm.
Houston, and what have you seen and what have you heard?
Yeah. So this last week, we hosted a Founders and Funders Fusion, which is just a mixture I put together so people can interact, but just highly targeted at innovators and those who fund them. And just because we entered this quarter very fast and heavy here in January, I pulled aside one of the investors who came, Todd Littman, I think that's his name, at Swan Energy. Sorry, Todd Litton, Litton at Swan Impact Investors, and said, and just ask him a few questions like, what's the sentiment? How are people thinking about angel investing? I think Swan Impact specifically invests in seed stage founders who make some sort of impact on the world, be it in climate all the way to other aspects of the UN SDG goals. And his kind of premise there was that there's uncertainty, that there's going to be a squashing down of how people think about their series investments. So just kind of to dig into this a little bit, generally when you go out to raise capital, you kind of brand your financing. Is it a seed round? Is it a Series A? And kind of the bar moves. This is one of the hardest things about being a founder is you're kind of selling something in the future. You hope you're positioning it right, but everyone else is also selling some sort of transaction. And what does it mean? Well, when there's kind of compression from the top, you have people who thought they were going to be a Series A 6 months ago who are coming in and saying, "Hey, no, I'm going to be a seed round now." Gives me a little chance to have like sloppier commercial milestones on my business, but it means I'm going to be able to position myself as kind of a better seed investment because we have all these other things that are going well. We're just not quite at a Series A, and so people might be marketing or positioning themselves as an early stage deal just to make sure they can get that capital. And what they do is they give up a little valuation. So seed rounds just generally have a lower valuation on it. What does that mean? There's now more competition in the lower bands. So as everyone pushes down, you should expect to either have more competitive terms. That generally means price. Sometimes that means control. But I think generally there's still capital being deployed. But at the end of the day, everyone wants a deal, and good deals get funded. It doesn't seem like the investors are necessarily holding capital or holding dry powder as much for their current investments. That hasn't necessarily been a big topic of discussion, but just the general concept here is how you position yourself coming into this quarter matters. In order to grow the business, everyone has to have a way to make money, unfortunately, for whatever that means for your valuation. So that was kind of the little discussion we had back and forth.
Can you tell us
Yeah.
what is Swan? Is that an investment firm? What do they do?
Yeah, sorry. I wish I had my notes in front of me. That was better. But Swan, I think, comes out of Austin. They're kind of a group. I think Todd is the Houston rep, leading things here. And so they, I'm trying to remember off the top of my head. They do anything from like $250,000 rounds up to $2 million. But it's a group. It's an angel group. So
Mm.
deals get sourced through the community. Sorry, I got a cough coming in here.
Yeah. So an angel group, kind of like what we have Han here, Oh, Houston
Yeah.
Angel Network. Yeah.
And
Mhm.
not Goose. So yeah, so we got all the birds coming together in the angel groups. But no, Swan specifically stands for Southwest Angel Network, I think, and they kind of rebranded as just as Swan. But generally, people coming together to invest in good deals, but with the focus around not sustainability in the green sense, but sustainable businesses that are good for society in general, and that's kind of the impact part that they talk about. Just because of a group describes themselves as impact driven, they still look for returns. And at the end of the day, it's an angel group. They want to make their money back, and they're just kind of focusing the aperture down to make sure that it aligns with the personal mission of the investors.
Hmm.
The way it kind of works is they bring back deal flow, and they kind of present it to the group, and groups will individuals in the group will raise their hand and say I'm in. And just from my experience pitching angel groups like this, you'll get checks as small as $5,000 up to $500,000. Tends to be more on the small side, but one $500,000 check is obviously worth 100 of the smaller ones, and so you kind of get a composite of that group coming together. And then they syndicate. So what they'll do is when they decide they like a deal, they're leading it. They'll go out to the other Texas Angel groups and say, "Hey, we're interested in this. Who else is interested?" And they'll usually share their due diligence. The due diligence is usually in like a 1 or 2 page memo that says, "This is what we like. This is the stage. Here's why we're investing." But it's not as in depth as like a venture capital deal memo, which might be 20 pages. So
Hmm.
it's a very different process, but really for those folks at the early stage of their fundraising cycle.
Hmm. Okay, awesome. Um, yeah, so and they are really focused on impact, you said. Like that is
Yeah, yeah.
niche to them. That's different from some of the other impact angel groups that are here who are kind of don't have that. So that's good to know. I did not know that.
Yeah.
And as you were talking about it, kind of the general trends, I know actually before I go into that, so if you are joining us live, like do leave a comment on the chat group so that we know, we're kind of blind in here. I okay, yeah. So just leave a comment. Let us know that you're there, so we know you're there. And we want this to be interactive. So if you have any questions on with regards to what Jason said or anything that we're talking about, anything you're curious about, just put it on the chat and we'll pick it up and try to respond. So we want this to be interactive. So just say hi. Let us know that you're here. Yeah, I was going to refer to this article that just came out on Innovation Maps which kind of spoke about VC funding in Houston region, and it actually went up in 2024 about 23%. So it was 1.49 billion in 2023 and 1.83 billion in 2024, and this is based on PitchBook data. And roughly half of that funding came in the fourth quarter, and that was about 914 million. And a lot of that, a large percentage of that, can be attributed to Fervo Energy, which is a geothermal energy startup. They raised 634 million in the fourth quarter, and this was followed by Cart.com at 50 million, and then a chemical manufacturer or chemical manufacturing platform called MStack. And then the last one was a superconducting wire manufacturer, Metox, which raised 40 million each. So we've had some pretty big raises in Houston in the last quarter. So it speaks a little bit to what you were saying earlier, Jason.
Yeah, I think Medox is interesting. They're doing transmission infrastructure, right? They're helping to reduce, I guess, the resistance in power systems. And then Fervo, of course, is doing base load power, and we're seeing that huge demand for data center power. So it really kind of speaks to the macro trends. And these were all, coming in last year before a lot of the new policy focus hit. So I think there's just this growing understanding of kind of the energy needs in the broader ecosystem, and that's kind of what we're seeing get funded. Um, I think and so that's for Houston. I think if we look at just the broader ecosystem, I was looking at financings that just happened last week. I think the big one was Sightline Climate raised a $5.5 million seed round. Interesting that it's a seed round. And there's two things that says. One, seed rounds are still big, so $5 million is, I think, still in the sweet spot or the middle for a good seed business, and they're growing. Again, there's some that is it a seed round because of the current environment, or is it a Series A? But just 5 or 10 years ago, I would say big seed rounds are like $1 million. So um, there's definitely more capital coming in earlier when there's strong market need. But the other thing that's interesting is obviously it's a very climate focused data company that's raising capital. Partly because they got really good traction. Don't get me wrong; it's a good business, but it also says that the investors coming in are still seeing long term that there is a demand for this kind of data around climate technologies, and decarbonization, and that's independent of kind of the U.S. policy that seems to be coming out now. Now, obviously, this deal like was minted in December, well before the Christmas holiday. It's just announced or closed these first few weeks of January. But the fundamentals don't change in terms of the investors investing. So it's definitely a good sign for people working in energy and
Yeah,
energy
and then
technology.
if you look at all of
Yeah.
last year, I mean, if you look at the total VC funding, all over the US was about 209 billion. Um, and out
Mhm.
of half of that was AI, right? Which is kind of
Mhm.
obvious. Everyone's excited about AI right now. But then the second category that got funded the most was climate tech, was clean tech, which is also an
Hmm.
indication that there's a lot of interest within that. I mean, there's an interest in energy, and a lot of solutions that we see out there within that categorize themselves as clean climate tech are also solving the energy trilemma.
Yeah. So Steve asked a question here in the chat, if we could talk about the name of the climate startup. So it's a Sightline Climate. Sometimes they have you might
CTVC.
more well you might know them better as CTVC, which is kind of the blog that spawned that group. But they do really good analysis on capital flows into the ecosystem. I believe the founder was a former investment banker, and so just applied a lot of that mindset to analysis of the ecosystem, and kind of creates that insight. And they got some good marquee customers. I believe their primary team is actually based out of the UK, so not necessarily a US company, but I believe Wesley Group was one of the leads, and they're
Mm,
out of California. So just a
mm.
international kind of
Yeah, and
movement
like
here.
you said, it's a data company, so it's really about analytics. Um, and what do
Hmm.
you think, Jason, in terms of when it is a more of a software company versus a hard tech and their seed rounds? Do you see a difference there in the size of their round? Like, if this was a hard tech, would 5 million be enough?
I think generally, so we're seeing with a couple of our founders today, they're all raising $3 to $10 million in the seed round, and we got four. I think I was in conversation with in the last 2 weeks, and I think that's typical for a company where the market kind of justifies. And what do I mean by that? Like the outcomes have to be there, and generally the push and the macro trends for these kind of energy tech companies are still there, and that justifies the investment. And obviously, you need things like traction, grants, things like that. And I think the founders have gotten a lot more sophisticated in the last 5 to 10 years to kind of put the pieces together to make that financing tenable. So on the one hand, your question is, is this enough? Well, to build a climate company, generally, if you're doing hardware and you're growing big, over the life of the business, you're going to need like 100 to $200 million, depending on how much you decide to build out your value chain. You can obviously go big and go and raise $1 billion. I think I saw Crusoe Energy also raised a big chunk of capital, but they're all the way down to their like Series D, because they're putting capital into assets. They're building power generation assets, and that just happens later in life. But for that start, I think the amount you can get done on a seed round for $5 million is still a lot for a hard tech company. The things you're proving just tend to be different, which is more around technology viability, like does the
Mm,
physics work? Because we know the market's there, and people will buy these things. There's less product market fit
mm.
uncertainty, usually when you're going out and building these
Okay.
things.
Oh, super interesting. And then when I was looking at the data of the climate funding that happened, it did drop and the overall clean tech funding did fall from last year, but that's kind of overall we are seeing kind of post 2021 a decline. But there was a drop in areas like batteries and renewable energy, which is wind and solar primarily. But there was money being poured into new technologies, and we see that in a lot of the big deals that happened. So anything related to carbon capture and storage, hydrogen projects attracted a lot of investors. Um, and yeah, people are still making, and like you said, despite the, you know, by November, people knew what to expect in terms of like there'd be a new administration and the policies are going to change. But what we are seeing is that the big projects related to CCS, anything kind of very closely tied to the energy transition and the fossil fuel industry, those projects are still going forward. They're still getting funded. Um, but there's obviously a question mark since a lot of the funding, what that comes from the government at least, has been paused, at least for now.
Yeah. Kind of bringing this back
Hmm.
to Houston a little bit, I want to throw up a graphic I came across from let's see, it was Carta actually. And this is from 2024 data about the prevalence of safe notes and seed rounds and in various metropolitan areas. And Houston and Dallas are down here. And what's interesting is more than half of deals now are coming out as safes. And this is all pre-priced capital, meaning they don't have a cap. There's no like equity valuation. Um, but again, 3 or 4 years ago, I think that the general consensus was, investors in Houston didn't like safe notes, didn't like the concept. It was, definitely something much more popular, in the, California Bay Area. But guess what? We're not, lagging here. I think, doing much better than, say, Maryland or other places. But generally, I think founders should approach coming into the round saying, "No, we're gonna do a safe note." It's, better for founders, better for the startup, and better for investors. It's a lot less time. It's a single sheet of paper, and I think generally that is the trend of things going towards safes, and that's what I would recommend to any founder. And the data shows it that this is the direction people are going. So yeah, we crossed that big threshold, and it's going to keep
Hmm,
going.
interesting. Yeah, because I mean, I remember when I moved back to Houston a few years ago, a lot of people, I met somebody, a lawyer, who was advising people not to do safes. So I think that kind of mentality was quite prevalent. So could you talk a little bit about, why is that? Um, and like, what are the key difference when it comes to, yeah, safe and others?
Yeah,
Mm,
I think
mm,
legacy investors really like
mm,
notes.
mm,
It's debt. Debt kind of comes in. It's usually a simple form of debt, and sometimes we'll have equity like debt, which is called a
mm,
convertible note. And a debt is very investor friendly. Like when the in a typical business, they're going to get paid back. But for most of these startups, like a energy tech startup, you're putting tons of capital to work into things, and that money is gone. It's not like you're gonna have a lot of cash to return to investors until you exit, or until you get acquired, or until much later in the business's life. And so from an investor perspective, like on paper, buy rights, like it looks good because it says you're going to get your money back. But the reality is, unless the company is super successful, you're going to spend as much money on legal fees trying to get your money back, because things are tied up in physical assets, or they were spent on people, and there's this chunk of IP, and it's unclear what that IP is worth, if you can even sell it. And so I think safes are just practical. They look at the world and say, look, we have a portfolio. We expect out of the portfolio a certain percentage are going to succeed. Typically, in a angel portfolio, they recommend you have 30 to 50 investments so that you can hit kind of the two unicorns or thunder lizards you need to hit to kind of return your entire portfolio. Um, and you just kind of let it ride. Now, no one likes to lose money on any one deal, but the reality is, if you believe in portfolio theory, then you should be able to return at the greater than 18% that kind of angel capital tends to do when you have that big portfolio. Um, and uh, the safe note just kind of makes the transaction easy. It lowers the cost. And the biggest challenge with convertible notes is they come due. So usually they have like a 2-year term, and the reality is the business never goes perfectly. You're never going to have the money in 2 years. and you always kind of have an existential crisis with the business where you either got to pay off the note investors to continue moving, or figure out a way to convert them to equity. But technically, you're insolvent if you can't pay back that note, and no one likes to be in that kind of position of always struggling on the edge of default, where you have to like pay your staff or pay your vendors or pay back your investors. And most good investors will kind of roll over the note or figure out a way to work with you. But at the end of the day, it's a cudgel, and a safe note just says, "Hey guys, we're all going to be in alignment here, and we're going to make sure there's equity in the future." But it's a very loose contract by comparison, and so I can see why some investors just don't like it as much. But the reality is they're taking the deal, so they're
Yeah.
taking the
I
safe
mean,
notes now, so they must
yeah,
be
if
more
you
comfortable. Yeah.
are going to be that risk taker, invest in venture capital, I guess that's where the industry is heading towards, right? And on the West Coast, it's been there for a very long period of time already. And I think thinking about hard tech and the longer time cycles, right? The longer development
Mhm.
cycles, the long time it takes for an exit, a safe makes more sense. Absolutely. Yeah.
Yeah.
So I also wanted to talk about one of our company's Energy Tech Nexus that was featured in Innovation Maps this week because of a big manufacturing partnership that they have just announced with Bixby International. So they are a thermoplastic extrusion and lamination company with Rheum materials. So that's
Mm.
the startup that is part of Energy Tech Nexus, and we actually brought them on our podcast called Energy Tech Startups. If you want to learn more about them, um, do do listen to our podcast. And what they're really working on is bio-based materials. So really being able to reduce the carbon footprint of it's a replacement for leather.
Mhm.
And reducing the carbon footprint of synthetic leather that you can use anywhere, basically in your cars, at home, whatever. That can be a replacement for leather. Did you want to reflect on that? Anything you wanted to say, Jason?
Yeah, I think like with
Mm,
and I don't think
mm.
our show with Zimri dropped yet. I'm trying to remember if we actually posted it, but
Huh.
I think the important thing is, when building an energy and climate
Mm.
business, there's a lot of like things you have to put together. And we were talking about like what can you do with a seed round. Well, one of them is not build your own factory, right? Finding these partnerships in the supply chain where you really know what you do really well. And with Reome, it's about like the specialty compounding, getting the chemistry together, and designing the products, and then marketing those to further downstream people. Um, but like building a factory is its own skill set. Kind of running the assembly or the injection molding line, the laminates line. That's a lot of work and a lot of capex. And guess what? It's easier to use a vendor's capital and just pay them essentially for the return on capital than trying to do it all yourself. And this really, just a finger to the wind here. If I had to guess how much money this is going to save, right? Having an outsourced manufacturer means they're probably saving $10 to $20 million just to do a pilot facility, and this sounds like a relationship that's going to support Reome for years. And so, really, it's a way to leverage other people's capital without having to raise it yourself. And so that's great. And I think most energy tech startups have to find that kind of manufacturing partner who's going to be really there with you till the end. And it's win-win, right? If everyone kind of makes it out, they're going to be a huge vendor for, or Reome will be a huge client for them. So that'll be a good win.
Yeah, I think you're right. We haven't dropped that podcast yet, but it's coming, so watch out for that, with Zimri. Yeah, really interesting to learn about his journey, from how he started his business and, how he's able to take it to where it is today. So what else, do we see happening in Houston this week that people should know about? What kind of events should they be watching out for?
Yeah, I had one other event I wanted to cover from last week, which I think was a
Yeah.
lot of
Mhm.
fun. This one was called, what was it called? Fortifying the Future of Energy. It was over at the Junior League, which I didn't even know existed until I showed up there. And it really featured a gentleman, Dr. Paul Stotz of Peak Learning. There was also Corey O'Keefe, the CEO of a company called Parallel, and Devlin of CLTR did kind of the opening. CLTR's Clean Tech Leadership Roundtable. Probably got that acronym wrong. And then Katie at Ally Energy. It was kind of a good show, a lot of folks there, but Dr. Paul Stoltz like stole the show. And the reason I want to bring this up for founders, and I think there were a couple of them there, but it was just a masterclass in watching someone present an idea and kind of get an audience around you. And I think the best founders are really good at crowd work. And crowd work, like, I mean, when you're doing like stand up comedy or when you're working a show, where you got to like pull people in and kind of get them excited and paying attention. And the worst thing that happens is when you're at a pitch competition and you see all the investors kind of strolling through their phone, and it's probably because they're not engaged or they feel like they only have to pay half attention to you. But Paul did a fantastic job. Sorry, Dr. Stoltz did a fantastic job of kind of commanding the crowd. And it's clear that he's been doing this for like 10 or 15 years. He's running his consulting firm. Um, and I think it's a masterclass to see other kind of entrepreneurs and innovators really impart their ideas on the world. And this is kind of how you create the future. And what he did was interesting. Everyone else kind of did a presentation on stage, but he actually came down and started presenting on a chair, essentially in the middle of the crowd, and it was very much like an interactive performance. And so he would give us like a lecture essentially on grit. And grit is this concept of people who really face adversity head on and create a lot of value for their businesses, and trying to identify grit. So peak learning is all about assessing and teaching grit to employees. And the way he did it was by really just getting the crowd together and getting them to engage and talk to each other every few minutes about a topic related to grit, but made it a little bit of a game where we had to go around and discuss. And in those few minutes, he would come out and kind of interview the crowd and have them participate in the event. And I'll guarantee you, I'm going to remember that conversation and that presentation for years, if not the rest of my life, because of how engaging it was. And I think the thing to take away here is, yes, you can kind of break the mold sometimes when you're doing a presentation, but having that kind of holding of the audience in the palm of your hand is just like a super skill. And I think you see the founders in Houston who have raised large amounts of capital. They develop that skill over time, and it's just kind of all eyes are on them, trying to understand the wisdom that comes out, and people will take something away from a presentation, and it comes with practice. And it was very clear that Dr. Stoltz had really practiced this presentation, and it just came off natural. So I really appreciated his skill. I don't know if there was else I want to say on that, but it was just an appreciation for someone doing a great job.
Awesome. And what do we have coming up this week in
Yeah.
Houston? So
For us, go
Mhm.
ahead.
No, I was going to say, yeah, from us, we have our work Wednesday on Wednesday lunchtime around 12
Mhm.
at our Gassner location. So if you want more
Yeah.
information on that, send one of us a DM. We'll make sure that you get invited to that. Yeah, go ahead, Jason. If you had something
Yeah,
else. Hmm.
I was gonna say, I think we it's gonna be a good lunch. We're gonna do it in the lobby this time of that 820 Gessner. So hope to see you there. Um, I don't know if there are other events going on this week that are of note, but go ahead.
Yeah, I don't think we have something specific going on this week. We did our Founders and Funders Fusion last week. And then we have a low carbon investment summit coming up, and you'll find more information about that coming soon too. If you want to know about our upcoming events, I think the best place to find out is first LinkedIn. Go follow us on LinkedIn. There you'll be updated of the events that we're doing, what's coming up, what's the latest. And secondly, it's Luma. Luma is where we post all our events. Most of
Mhm.
our events are public and open for everybody. So if you just go on there, you'll see what we have coming up for basically the rest of the year. So you can sign up and have them in your calendars.
Yeah, and I was thinking actually, there's NAPE going on this week here in Houston, which is a big show, and they're expanding the show beyond. I think it's traditional natural gas, and they're covering everything from mining to renewable energy. So it's going to be a big event. I think February 5th to 7th. And that's more traditional industry, so not necessarily startups. But I know that's a big focus for folks this week.
Hmm. Yeah. And then we're, as Energy Tech Next, is gearing up for Sarah Week, which is going to be huge in Houston. So it's still a few weeks away, but it's important for people to mark the dates, 10th to 14th of March. We're going to be doing an energy tech market on the 13th of March, and you'll find more information on that coming pretty soon. But that's a week where we have people from all around the world in Houston. So it's really hustling and bustling, and a lot of deals also happen during Sarah Week. That's correct, right, Jason? You've seen that happen.
Yeah.
So for startups, the Agora is a great place to be.
Yeah. I think unfortunately tickets are like, I'm gonna say $600 a ticket. So the best bet to get in is to try and find an invite through an STO, or someone who's kind of hosting a bigger show. And then uh, I think there's obviously a lot of deals that can be made. What's great about Sierra is you get all the decision makers in a room, especially on a corporate level. And if you do your prep work ahead of time, and have a deal kind of ready to discuss with people, it's a very straightforward place to round up investors and get commitments, and a great place to launch a roadshow. Generally, in my experience, if you get like 30 to 40% of a financing committed, you can get the rest done just because that momentum gets going. And Zero Week is a great place to get that first 30%.
Hmm. Okay, awesome. And if and we send a weekly newsletter and a monthly newsletter out. So if you want to know more about what we're up to, also just latest news on energy tech in Houston. Um, yeah, Jason's asking if we want to wrap it up. Did you have something more, Jason, that
No,
you
no, no,
wanted to
no.
bring up?
Sorry,
Yeah,
this is just
yeah,
on the private chat. So I was
yeah,
curious where we were for timing. I think
yeah,
when we first started this, we were discussing, is it 30 minutes? Is it 45 minutes? And I wasn't quite sure what we were doing
yeah.
this morning.
I think it's like whatever we have time. Like last time, we had a lot to talk about.
Yeah.
Um, we could still talk a lot more today on policy, for example.
What do you want to dig in on?
It's just if we want to get in there or not.
I think as long as it's relevant to energy tech, I'm game.
Yeah. Um, yeah. No. No. I mean, I think last time also we had a lot of like people with commenting and a lot of great interaction. So if you're watching this, do leave comments. We might not, if we're not live, we'll get back to you through the chat. Thank you for joining. And yeah. I was saying before that if you want to, subscribe to our newsletters, just go to our website, which is www.energytechnexus.com. And we'll be doing these lives every week. Sometimes they'll be 30 minutes, sometimes they'll be longer, depending on how
45.
much we have to talk about.
Yeah. And I guess if you're a founder looking to grow your business and tackle everything from go to market to fundraising, we're here to help. We obviously do this by bringing founders together and helping them create authentic connections, connect with the resources they need, and then we also help them as they navigate becoming the founder that runs a Thunder Lizard. And then if you're on the corporate innovation side, trying to understand new technology, reach out. We're here to help. We get to see a lot of technologies, and we can kind of help contextualize them within the Houston environment.
Awesome.
All right.
Yeah, thank you all for joining. Thank you for listening. If you're watching the recording, and say hi, leave a comment. If you do join us later and watch this video, let us know, give us feedback. And if you have any questions of things you want us to cover for next time, next Monday, make sure to leave that comment and we will pick it up next time.
All right.
Thank you.
Thanks. Bye.